Good morning, afternoon, or evening, ladies and gentlemen. All in crypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new around here, every single day at 1 p.m. UK time, we drop an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that is exactly what we're going to be doing in this video. It is a significant day for the broader markets as you have the Federal Reserve's rate decision and also the minutes to come out after it. This is where Jerome Powell will essentially give a speech and forward guidance on interest rates, and ultimately the markets will adjust accordingly. Now, this is interesting because we have, since the start of the week, been looking at a potential pattern for the Dixie, which is the dollar against a basket of other currencies, which will lean on the crypto space if it plays out. And we will be revisiting that. You know, we had somewhat called someone out for saying that this was just a textbook washout and a liquidity grab. We did look yesterday at how liquidity grabs work for institutional players. They need to kind of engineer them to get in. But that was in yesterday's video. So we'll be looking at the immediate, where crypto's at right now, where Bitcoin's at, where the dollar's at. But we're going to start the video off with some interesting things. We're going to be looking at a recent announcement from Donald Trump in regards to his digital collection. But we're going to be starting, before we get into that, with Senator Warren, who has been a hindrance, an adversary to the entire crypto space, talking about how cryptography can only really work in the form of CBDCs. And when we look at this clip, it makes a lot of sense in regards to why she is so anti-crypto. Now, if she was anti-crypto for genuine concern and reasons, then we couldn't really falter. However, the reason she is anti-crypto is because she is batting for the other team, the special interests that she is paid for, that this industry seeks to disrupt. Just like Jamie Dimon coming out and saying he would ban all crypto because he obviously works for JP Morgan, which has a very rich history in the United States when it comes to banking. So we've also got a number of other things to look at, like Tether. Tether are now complying with sanctions rules from the OFAC, I believe, and have actually frozen over 161 accounts. And this kind of is an interesting dynamic because I believe money should be neutral. And the people who control money, i.e., you know, who controls Tether? Well, if Tether frees people based on US sanction laws and stuff like this, then, you know, it's kind of the US government. Well, let's start the video off with a clip of Senator Warren talking about CBDCs, and it makes a lot of sense with why she's bringing all this up, because, of course, she bats for the other team. And then we're going to move on swiftly to Donald Trump and everything that we've got to cover on the markets.
So, in theory, a digital currency issued and backed by a central bank could provide the advantages of cryptocurrency without those risks. The Federal Reserve, a trusted institution, could provide a digital version of cash to the public that is secure, stable, and accepted everywhere. So let me ask you, Professor Menand, what role could a central bank digital currency play in reducing these kinds of risks to financial stability?
So a well-designed CBDC could serve as a public alternative to these cryptocurrencies and potentially crowd out their usage. In contrast to private digital currencies, CBDCs would be sovereign, non-defaultable money. They'd be cheaper to use, and they would not be subject to bank run dynamics.
Right. So that's very helpful. Thank you. So,
be subject to bank run dynamics. What an inaccurate statement. All banks are essentially bust. You know, if you look at the amount of money these banks supposedly have in regards to what they actually have in reserves, they are well and truly insolvent. So I thought that was a rather ironic statement. And this ultimately is what we're highlighting by bringing this clip up. A lot of the stuff that's come out from Senator Warren, you can understand why she's doing what she's doing, because her multi-million-dollar fortune has been made up and largely given to her by the very system that cryptocurrencies seek to disrupt. He also talks about phasing out crypto. Well, what cryptos are you referring to? You might be referring to the likes of USDT and USDC. If you've got the actual government backing it, people may use it, be more likely to use it than ones that are kind of, you know, there's a little bit of gray area around and stuff like this. But when you're talking about Bitcoin and stuff like this, they fundamentally misunderstood what Bitcoin is and what it's trying to do. And they've also fundamentally misunderstood the broader implications that distributed ledger technology has for the world as a whole and all the use cases that it has. You know, it's one reason we think maxis are the most confused and uninformed people in the room. They've seen an entire technology, distributed ledgers, and they've gone, well, it only has one use case. You know, that's like saying the motoring industry is only for tricycles or whatever they're called. Let's move on now to a little bit of news in regards to Donald Trump. And it's very interesting that one side, like Guy is saying here over at Coin Bureau, one side is trying to kill crypto with executive orders and anti-crypto bills. The other is selling NFTs of their mugshots. Choose wisely, American. So this is obviously referring to, I won't play it because it's copyrighted and got music over it. But this is obviously referring to Donald Trump's NFT collection that is very interesting. And you can see, you know, quite a contrast, really. On the topic of CBDCs and everything that's coming, Tether aligns with the OFAC sanctions. If we go to key developments, freezing of wallets, Tether has frozen 161 wallets today, including those linked to Tornado Cash. Voluntary compliance, Tether describes this policy change as a voluntary step towards cooperating with the US sanctions regulation. So who really controls Tether? Impact of the OFAC's guidance. The US agency had previously clarified in October 2021 that cryptocurrency companies operating within the United States are obligated to comply with OFAC sanctions. So this is the thing, right? When you look at things like Tether and stuff like this, they really are totally beholden to the United States government. And stable coins actually, I think, benefit the likes of the Federal Reserve. You know, they increase the demand for dollars. And certainly if you look at countries across the world, you know, Argentina looking to dollarize. It's an interesting thing. All the Bitcoin maxis saying, yeah, you know, go and destroy the central bank only to be at the behest of the Federal Reserve and dollarize. You know, very interesting. I think a lot of people don't understand that situation in full. But Tether is in some ways controlled money by the very people that already control money. I mean, of course, it's pegged to the dollar, but actually now they can imply sanctions and get people's accounts actually frozen. So I think this was a very interesting development. On to the markets, ladies and gentlemen. And this is what we've been looking at. So the dollar has been key for me. We've shown multiple times, and we won't go through it for the sake of time in this video, the stark correlation between the dollar and we'll use Bitcoin or any risk really. Dollar up, Bitcoin down, dollar down, Bitcoin up. You know, the bottom for the stock market and the dollar perfectly aligned. And then so on and so forth. You know, we ran into 30K for Bitcoin. We ran into a bit of a top for the dollar. For the S&P, whilst we had a bit of dollar strength. We were speculating that it was going to roll here and risk was going to do well. It's done exactly that. And now we're potentially at a period where the dollar is finding its feet again, which may lean on the crypto space. And we looked, first of all, on Monday at Bitcoin. So Bitcoin made our head and shoulders target that we had earlier this year. It then pulled back very sharply, going into a week of extreme data with CPIs and everything in between. Not only did Bitcoin do this, the dollar also, in my opinion, is looking to set up a short-term head and shoulders that would see it running to the 105 level. This would, given the correlation that we've just shown, lean on Bitcoin. And remember, Bitcoin has done spectacularly. Altcoins are all breaking out. Many altcoins have broken out. They look like they might need a retest, although I'm not sure how likely it is. Actually, this Cardano pattern could potentially set up for continuation. If you look at things, even like Hedera, you know, lots of altcoins broke out, but they're now just kind of holding strong. But the dollar is the main focus for me. Today, you have, to move off of this page, the Federal Reserve's fund rate meeting. You also have their economic projection and statement. So I believe they're probably going to be a lot more hawkish than a lot of people would like to have seen. In regards to the actual rate hike, it's pretty much no chance that they're going to hike. In fact, if we go over to May, you can see the probabilities are now in favor in May, as early as May, and we're starting to see them priced somewhat in the likes of March for cuts. I'm not 100% convinced you're going to get those. We had CPI yesterday, which came out at 3.1. I think the majority of expectations I saw were at 3, so a little bit more sticky. If you look at something like oil, it's coming down, but this is the big one for me. And if you do get this on the back end of today, then in a broader scenario, remember we are bullish, we're just calling a short-term leaning on the crypto space. This is likely going to come to the downside. You know, this is where we're sort of aiming for. Give us that bull run into the yield curve playing out and everything in between, and your kind of crash scenario, which we're sort of looking at. So it's all to be watched for the dollar. This is why we were clowning the individual that was just saying this is a textbook washout. I don't even think he understands what a washout is, you know, and he was also clowning flat-footed investors and stuff like that. But you know, this is Bitcoin selling off. I think had a lot more to do with the broader macro stuff, like the dollar, stuff like the heavy economic week of data we've got, than just a textbook washout. You got to remember, Bitcoin has done an awful lot. What we need to see now to move forwards is some sort of a setup. You know, whether that occurs in a kind of flag-like structure, and then we set up for that continuation, whether we just break. You know, there's a multitude of ways this can play out, but it's worth watching. And actually, a pullback for me is very welcome. You know, we've got a really good bag of crypto that's doing very well. Not only myself, but my community is pretty much all in the profits. And that's been just accumulating this year. We've made money this year alone. It's been a very hard market for most, I think. But, you know, a pullback for me is kind of welcome. So I'm kind of happy if the dollar plays out in this kind of a scenario. Also happy for it not to. You know, remember, this is a bull market now for crypto, and you should expect the market to act in that kind of a manner, just like that ascending structure that we had, which typically aren't the most bullish structures, but it broke to the upside. That's all I've got for you in this video, guys. If you've enjoyed the content, like is appreciated. So is a comment. Let me know your thoughts on all this in the comment section. And on that note, I'm going to love and leave you. Thanks for watching. See you in the next.